Markets looking absolutely flat, really no major change, about 12 points on the lower side, 8,325. But as we've been saying, the good thing is that 25 points of, or about 30 points of the day's lowest point. Let's welcome in our next guest, Mayuresh Joshi from Angel Broking. Mayuresh, let's first start with the news flow on Lupin. What came in today, of course, is a very small plant, but what happened to the Goa facility as far as June EIR is concerned? Do you think it's a positive step? It's a step which is telling you that it's a group company, things happen on time, what they plan accordingly. Most probably, the timelines that they give, they tend to do things within that timeline.
Afternoon, Pankaj. Oh, yes, I think the development is definitely positive. But again, I think getting the EIR does not mean that the entire facility is cleared for approvals, though I think the positive sentiment thereof would be that there is no further negative damage coming through. So yes, I think timely resolution by top tier pharma companies is something that has always worked for them historically. And again, I think the recent 483 that has been issued on their API plant, the API sales itself are very minuscule compared to the overall top line. It might have a little bit of dent in terms of how the earnings might pan out, but it's just a little bit. So in my opinion, again, I think they've got a strong pipeline. The domestic formulation business is looking extremely strong. They've got a first mover advantage in Japan. So it is a qualitative franchise. I think the numbers in the past 2 quarters probably let them down a little bit. And again, valuations at that point were a little bit on the higher side. So yes, I think sentimentally positive for the stock. And again, I think positive development should rub off in terms of earnings over the next 2 years.
How would you look at Cadilla's news flow? Of course, the warning letter issues are not yet solved, but they have received an EIR for the Form 483. You think there is some time before we see approval coming in? Or markets will start to factor in an approval coming in on the warning letter side as well, because they have started the initial process, the initial outcome has been positive. So probably things should end well and quite soon.
Well, yes, I think that's probably the logical outcome that the market is looking forward for. Having said that, probably I think one must realize that the remedial and remediation issues do take 2 to 3 quarters, to say the least, for a full clearance probably to come through. Having said that, probably I think all the FDA plants which are probably under scanner, and Moraya specifically for Cadila, I think FY17 is largely assumed that the remedial issues and the remediation issues will probably take forefront. So the developments in terms of earnings improvement will start happening from FY18. It's a very key facility for plant for Cadila Healthcare, because key approvals for the US markets to come through that facility. So what has come, probably again a positive sentiment in terms of Cadila, but one must realize that FY17 numbers are not going to change much. I think whatever might happen, if positive developments do take place over the next few quarters, would start getting reflected in FY18 numbers.
Right. So FY17 for Lupin and for Cadila, you're not expecting any major growth, right?
No, I think again for Lupin specifically, I think it all depends on how fast they can resolve whatever's there on 483. And again, I think the pipeline or the structure would be in place. So even if I largely assume the kind of growth that the US markets might deliver at around 15-18% to say the least, the Indian markets delivering a growth of 15% over the next couple of years, and the Japanese markets posting a growth of 10%, you might still expect an overall top line growth of 15 to 16% for Lupin over the next 12 to 15 months. And again, that will reflect positively in the same proportion on their earnings. So yes, I think my own expectations are that the earnings per share should be close to 69.5, 70 odd rupees for Lupin in FY18. And this is largely not even accounting for fresh approvals to happen on a very fast scale, because the kind of pipeline that they've got is pretty large. 35 FTFs, they've got a huge pipeline in terms of pending NDA approvals. So once that starts happening in FY18, if one really assumes most of the issues would be behind by that point of time, I think there might be a re-rating both in terms of top line and bottom line growth.
How would you look at Aurobindo Pharma? That's hitting days high. It's almost at 770 levels now.
I think it's always been a growth story, and again for Aurobindo, I think the pipeline has been pretty huge. So they've got around 382 odd applications, they've got around 220 odd approvals. So there's a huge pipeline still to be approved. The management is very hopeful of probably having 18 to 20 injectable approvals over the next couple of years. The injectable business is a high margin business for Aurobindo Pharma, and within that segment itself, I think you're looking at a decent growth come through. On the other side of their businesses, the ARV segment and the 2 acquisitions that they've done through Actavis and Naturol, I think it's It's become 80-85% formulation company, I think, driven largely by what they're probably doing in the Western European and the North American markets. So Aurobindo is looking on a very strong foothold, in my opinion. And again, I think it's a similar trajectory that one can actually perceive and foresee for Aurobindo. A 15-16% top line growth is probably not ruled out. You're probably looking at an EPS expansion. And again, I think the bottom line growth, if approvals start coming through specifically on the injectable side of the business, you will probably see this growth numbers sustaining.
Right. You know, as far as Aurobindo is concerned, it's trading at about 15-16 times. So it's trading at still a discount to the large cap names despite having good earnings outlook. So once the earnings start to come, people start to believe what the management is saying. Essentially, you think that there is a possibility of re-rating?
Look at the stock, Pankaj, has pulled in a big way over the past few quarters, and the expectations were always that the company will deliver in terms of their core product profile, and they've probably largely done that over the last few quarters, and that's precisely the point that we're trying to moot here. So if the injectable business, as the management is expecting, comes through thick and fast over the next few quarters, that is going to have a huge say in terms of how the margins pan out. And again, as the ANDA pipeline that I was talking about, I think if this generic approval starts coming through, both through their acquisitions that they've probably done and their standalone approvals that they've probably taken, my own sense is that the market share within the ARB market itself is pretty large. So you're looking at an addressable market size in billions of dollars that can be addressed by Aurobindo Pharma. So yes, I think the sustainability, as I was mentioning, in terms of top line and bottom line growth can be achieved if the approvals are much faster than what the street is expecting over the next 2.5 years. You'll probably see an uptick happening both in terms of how the earnings per share will pan out as well as the bottom line growth.
Right. As far as some of these consumer discretionary names is concerned, any sort of view on that? So something like a Havells, maybe a Jubilant Foodworks, anything of that sort that you like?
I think again within this entire space, whether it's consumer durables, consumer staples, my own sense is that monsoons and the 7th pay commission will have a positive rub-off effect. But I think that will not be seen immediately in Q1 numbers. You'll probably need to wait out for Q2 numbers, and then Q3 numbers will probably start reflecting the kind of underlying volume growth that these companies can witness. Having said that, probably I think one must also realize that the input cost deflation that these companies enjoyed over the past few quarters, they might not enjoy this going forward, unless one really assumes that crude prices start going down, and that has a multitude effect on the raw material margins and their EBITDA margins on a positive way. But again, if one assumes the EBITDA margins probably to inch up a little bit because of the inflation factor on the raw material front, it probably gets offsetted by the volumes, and that probably has leverage played out on the operating front on their balance sheets. So within the space itself, I think I'll be selective because valuations A have become extremely stretched. B, I think you really need to look out for stocks where the growth potential in terms of their P re-rating is possible.
Right, but most of these companies still are expensive. I mean, at least after the recent run-up, one cannot say that they are cheap as well.
No, absolutely. That's the whole point, right? And that's what I was trying to move through, that the valuations are probably expensive, not just by their own comparison, but even if you compare them within the sector, and if you look at the comparison within the Sensex, I think they are having a premium bias. Whether the premium bias stays is probably to look out for in the coming quarters' numbers. And my own sense is, as I was saying, I think Q3 onwards, I think the numbers should be extremely encouraging for a whole host of these players. So whether that be air conditioners, whether that be air coolers, whether that be two-wheelers, whether that be paint companies, whether there be selective FMCG stocks, I think there is huge underlying demand and potent demand that can actually drive volume growth over the next 4 to 5 years. And again, I think it's a long drawn-out story, but I think that story will play out meaningfully, specifically for an economy like India, where a whole host of rural population probably is still trying to get up the value chain.
Right. Some of these names like HUL, ITC recently have done well. Any view on these names? The traditional FMCG?
No, again, I think you must look at numbers coming through. And again, I think the classical argument that goes against these players, specifically for a player like HUL, would be valuations. But again, the underlying growth, what probably happens with competition, what kind of product profiles do they probably get in, what kind of products are they probably launching, what kind of distribution network that they're looking to expand through. I think all these places work for players like an HUL. It's a strong franchise, extremely strong balance sheet. The earnings growth has been extremely robust over the past so many quarters. And my own sense is, as I was mentioning earlier, I think if you've got a 4 to 5 year view on the Indian economy and the Indian story in general, I think all these stocks should probably do well.
Right. As far as private banks are concerned, IndusInd would start with the numbers on Monday. Any view on IndusInd Bank numbers?
Again, it has consistently performed, Pankaj. So my own sense is that it should have a decent advance growth. The asset quality should be quite stable for IndusInd Bank. And the management commentary in terms of their growth outlook going forward is to be keenly watched. But again, I think the expectations here are that in tough times, I think the bank has probably given stellar performances on all these fronts, extremely well capitalized. You're probably looking at credit cost being contained at very manageable levels going forward. And in a scenario where you're probably looking at the economy picking up over the next few quarters, my own sense is that the advance growth shall be far superior to what their peers are doing. So my own sense is that IndusInd Bank should report a stable set of numbers, but that probably would be in the price, and one really needs to look at their price to book multiples in terms of re-rating going ahead.
Right, as you just said that it can be in the price, which means strong set of numbers are already built in. So unless there is a strong set of numbers and a strong outlook, there is no reason to go ahead and buy this name ahead of results.
No, again, it really depends on the perspective, and IndusInd has always performed. So again, I think the expectations are quite upbeat in terms of their overall performance. Now, the stock has delivered in spite of results being in line or as per expectations of the street. But one must understand that this franchise is delivering numbers quarter after quarter for the past so many quarters. So even though their base has expanded, they're still able to manage to have balance sheet growth come through. And that is very, very commendable that the management has done.
Right, and some of the other names like Axis, ICICI, that would be more interesting because that's where we've seen some problems coming in as well.
Well, yes, I think that is a space that would be keenly watched out for, because I think a whole host of retail-oriented banks have done exceedingly well. Now, the banks like Axis and ICICI, which have got a corporate exposure stroke SME exposure, I think it will be an interesting set of numbers to probably look through. But the management commentaries have been quite robust after the last quarter numbers. I think the management is pretty confident in terms of what they've recognized on their balance sheet. And even though the credit costs probably are looking elevated at this point of time, the management commentaries in relation to how the overall outlook for the industry is looking, specifically the stressed out sectors that they've probably catered through. And if they're positive on that outcome bearing fruits in terms of recoveries, upgradations, in terms of the end working capital constraint cycle probably coming to a close, I think you'll see a respite happening probably in terms of asset quality pressures coming off balance sheet. So again, I think interesting set of numbers from both these banks, but management commentaries will be keenly watched out.
Right. How would you look at something like a NTPC Power Grid? You think those names are much more interesting? Those names can give a much better return?
No, again, stable set of numbers again expected from these players, specifically in case of transmission utility players like a Power Grid and an NTPC. I think the capitalization that these guys have done, specifically Power Grid, has been extremely encouraging. They work on a fixed ROE model, so there are no complaints on this front that the ROE probably is more or less predetermined. But clearly, I think their balance sheet will support their growth going ahead. And again, I think the kind of reforms that we're probably looking forward through with what Piyush Goyal has done over the last 2 years with Uday and the other schemes, I think the transmission outlay that one really talks about, I think there's a huge outlay expected to come through, not just for the 12th year plan, for the 13th 5-year plan as well. So I think you're looking at a very robust outlook in terms of both capex spends as well as capitalization to come through. And that probably ensures a fixed ROE model. And if their performance is much better, I think you can have some expectations of expansions of their ROEs going ahead as well. So yes, I think I maintain optimistic view on both these stocks.
Right, and but the returns of these names will be moderate from your own. I mean, it won't be like an L&T which can go up 16% in a day if results are great.
Again, I think these stocks have never delivered returns in that proportion. So I think these stocks have always been very, very stable. And in that sense, I think they're extremely boring for investors because they don't give you the moves that a lot of large cap or mid cap stocks give. But they're very consistent performers. And over a period of time, I think they've always delivered in terms of their earnings profile. And again, I think their dividend yields are pretty reasonable as well. So yes, I think there are no complaints on both these fronts.
Right. Mayuresh, just a word as far as something like a 8K Miles or Z-Learn is concerned, one of the first few companies to declare numbers, 10% higher for each of these names. Any sort of view on any of these names?
No, Pankaj. Unfortunately, I don't cover any of these stocks.
Right, Mayuresh. Thank you so much for joining us here this afternoon. Hope you have a great weekend going ahead. That was Mayuresh Joshi of Angel Broking. We're taking a break. We're coming back in 2. We'll be back with market closing. Markets are looking just flat, 87 points down for Nifty and about 16. 87 points down for Sensex and about 16 for Nifty.